I'm You Mon Tsang. I'm the co-founder and CEO of ChurnZero. And I want to welcome everyone to what I expect to be a really great session here at Big Rig. I have with me the CEOs of three of the most important and influential companies in the customer experience and in customer success space. And I'll introduce them in alphabetical order. And with me is Godard Abel from G2. We also have Nick Mehta from Gainsight and Todd Olson from Pendo. It's a real pleasure, everyone. Thank you for being here. And if you are an attendee of Big Rig, you probably know these folks already, right? But I want them each to say a quick sentence about their company and answer this icebreaker question. So the icebreaker question is, which decade do you love the most and why? So 70s, 80s, 90s, the noughts, the teens, and I'll even throw in the 2020s. For some reason, you love the 2020s. You'll have to explain that, but I'll throw that in as well. But let me start with the icebreaker. And for me, it's actually the 1970s. I was a child in New York City then. And the reason why I love it is that I just kind of remember all the senses from that decade. They were really vivid in my mind, right? It's the subways that were clanking and the boom boxes, music coming from the boom boxes. We would have garbage strikes. And so the smells from the garbage strikes are very vivid in my mind, graffiti everywhere. So everything's super clear. I'm sure it was terrible in many, many ways. 70s in New York was tough, but from this vantage point, it was all colors and cacophony in life. So the 70s is sort of sort of what I remember and love the most. Now, Godard, I'll turn it over to you. A little bit about G2 and the decade that you love.
Sure, and G2, we're building the leading review platform for SaaS and enterprise software. And my favorite decade, I'd have to say, is 1980s. Because I remember I moved to America, to Pittsburgh, in the 1980s. And I still remember all my favorite movies are from the 80s. All the John Hughes classics, and movies like Risky Business, or my favorite comedy still from Chevy Chase, that now I watch every year with my kids at Christmas vacation. So that's the decade I'm most fond of.
That's a great decade. Nick, how about you?
Well, I think I'm going to have to say 90s just to go in order, but I'll start with Gainsight. So Gainsight, we're all about helping businesses that have subscription, recurring revenue, drive more success for their clients, and in the process, keep their clients longer, get them to spend more money, and make them bigger advocates across customer success, product, sales, all working together. And mine is 90s for sure, because I Want It That Way by the Backstreet Boys, ultimate karaoke song, and closed down many bars at karaoke night with that song. So I'll have to go 90s.
That's great. All right. And Todd, a little bit about Pendo and your favorite decade.
Oh, thank you, Yuman. Well, first off, Pendo helps companies create products that users love by helping them measure and improve their product experience. And I guess I'm not going to go with a very creative answer, but I'll go with the 80s as well. I remember Back to the Future and Star Wars, and I remember rolling my pants, like those little things at the bottom, the tight rolls, and that I don't think I've ever had that much attention to my fashion after the 80s. So I'll have to go with that.
Rolling your pants. Oh my goodness. You know what? That's going to come back. So you should get ready.
I still roll my jeans, so maybe I'm living in the 80s.
All right. Well, that's pretty cool. Well, fantastic. Thank you for breaking some ice there. So let's now move to the main part of our discussion. Now, look, all of us on this stage, everyone in the audience, right? We've all participated in a lot of change, right, recently, and how businesses, especially B2B businesses, deliver excellent experiences to their customers. What's driven these changes? Well, a lot of it has to do with business model fluctuations, especially a move to subscription. A lot of it has to do with customer expectations having been elevated over the years, right? And also, just the realization that it's easier to keep a client than it is to land one. And all of this has sort of paved the way for a lot of change, and in fact, paved the way for those of us in this group to innovate and find success, right? So it's really been given us a lot of opportunity. But we're not done with change, so let's discuss that. I've asked each of you to come up with one prediction that you think can happen over the next 3 to 5 years. I want each of you to spend a few minutes introducing your prediction, and then the rest of us will then, poke and prod at it a little bit to help battle test it. And at the end, we'll actually survey the audience and ask them what they think about the trends. So let's just go through the trends, and Todd, we'll start with you, with you and your prediction. Go ahead.
Awesome. So probably unsurprising to some of the panelists, but I went with product-led onboarding and adoption solutions will automate much of what CSMs do today. And when I'm talking about much of what they do today, I'm talking about the more monotonous, the more mundane, and trying to automate as much there. And it'll be the best thing that ever happened to the role. And, just some basic supporting slides. Right now, a lot of our onboarding processes heavily rely on humans. And that's a lot of the work that's being done. And a lot of it's honestly fairly low value work. But we've taken snapshots from data across our customer base and just shows that customers that get the human-led onboarding typically are healthier customers than the ones that come in after the fact. And that's one of the big challenges we see is that the initial users are happy, but 6 months later, some person comes in the account. We don't know who those people are, and their experience is very, very different from those first individuals. So we need to rely on more automation. We need to rely on the product. There's plenty of examples of product-led onboarding, but also product-led support. I mean, I don't think I've met a CSM, certainly not at our company or even our customer base, that wants to be treated like a glorified support individual. They want to be trusted business partners and help work strategically with the customers. So in my mind, the focus of the future will be very much all of the support and product training aspects will be automated out. And the CSM's time is going to be 100% focused on driving business outcomes for their customers and serve as a trusted partner to product, because if they discover things that require automation, they should be feeding that data back to the product teams to make sure we can create and evolve the automation.
Now, Todd, let me ask you a question. First, I commend the way you sort of delivered an existential warning to everybody in the room, but you find a way to give us hope. So, congratulations on that. But let me ask you this question. It sounds like one of your premises is that if you focus on humans to do the onboarding, you may get a really quick start. But as other people come on board, sort of over time, new users, those people are simply not going to see the same kind of attention. And so therefore you do have to bring some automation, some product-led onboarding to that. That's sort of part of what you're saying. Is that fair?
Correct. Yeah.
Okay. Let me ask you a question, and Godard and Nick chime in. So when I talk to CS leaders, everyone I think pretty much agrees that onboarding is the most critical part of the customer journey, right? Like if you're going to focus one place, you have to focus there. Why not actually do product-led, engagement everywhere else except onboarding, right? Actually put all your human effort up front, right? Because maybe you'll make a difference there, and then try to automate everything else first. Why automate the most critical part of the customer journey first?
Because it's about bang for the buck. And, at the end of the day, and also we're talking about 3 to 5 years here, you eventually want to have the area that has the highest impact. And until we automate that area, I think we're not going to see the gains that we need to. And as you see, what we see is there's such a key indicator of that onboarding to the overall success. The better we can automate and scale that, the better it's going to be overall for the journey. And I mean, I'm sure a lot of folks are seeing, a lot of folks have scale CSM teams. So they're probably starting to think about this problem anyway, because there is just a, general issue with numbers of customers when you get to certain sizes. So that's why I think you have to do it. You have to onboard people. It's a requirement as part of the process.
Godard, Nick, any comments on Todd's prediction?
Yeah, I'll comment first. I think it's good. I actually think that definitely for certain types of companies, doing more in the product is actually critical for scale. And actually, I like Todd's point about the change of users and things like that. That really resonates with me. And if you follow Gainsight, we're kind of sort of gotten into this area too, because we really believe in this, everything Todd's talking about. I think the one thing, and I'm guessing Todd would agree with this, there's certain products where the user themselves is less technical and doesn't lend themselves to an in-product experience. When I talk to our clients, there's some subsets where either the product doesn't have much of user interface, it's more back-end, or the product has a very non-technical user. So there may be some pockets where it's harder, but I agree with Todd. I think this is a big prediction for the future.
And I would say, the other reason you want to automate onboarding is usually it's the same features you need to use to keep adopting the product and to keep adapting the product. And my prior two companies were CPQ software companies, so very configurable software that did require a lot of setup. But we found if we enabled the customers to do their own setup, then they were also enabled to keep tuning their system, make price changes, keep updating their system. And I think if you're relying on humans at the beginning, then the problem becomes, and they keep needing that human help, which if you're a software vendor is very expensive, very difficult to provide, and the customer isn't as agile as you'd want. And so I think also the long-term success is very related to that easy onboarding, because then they can keep tuning and adapting their own system.
Yeah, I think both Godard and Nick make good points. Let me ask you one thing, right? If you're today, I think most companies I talk to, customer success, they're the ones who really own onboarding. When it moves over to more product-led onboarding, are you also saying, like, maybe I'll ask this question: who, in 3 to 5 years, who owns onboarding? Is it the product team or is it the CS team?
But I would also say, most companies I think still have a separate implementation team.
Yeah. Yep.
And you have professional services, implementation services, right, that do the initial setup, and then it gets off to customer success, oftentimes when they're live. And obviously some people have it integrated, but I think that could also be the power that, really what you're reducing is more that implementation work that's often done by a separate team, right? And then the customer success team can just be that strategic advisor. And now that you're live, how do you get more value out of it? New features, more rollout, upsell, right? And long-term success, but that you can really eliminate that need for a partner or that initial implementation work.
Yeah, I think the lines are going to get blurry here, and that's part of the exciting part of the future. Like you think about how product-led growth has transformed. Like product-led growth, is that a marketer, a salesperson, or a product person? I don't know. Like, it doesn't really matter where we put these buckets, but they're humans that are leveraging the product to drive growth inside the business. So, if you have some hybrid cross-functional team that's probably composed of individuals from these different departments, I think it's probably the way the future will be. So,
I'll add one other thing that I think, connecting Godard's point and Todd's point. I think there's implementation and onboarding, and sometimes they're actually the same, but sometimes they're different. And what I mean by that is there's implementation, like setting up the software, configuring it, et cetera. As Godard says, that's often professional services. But then there's the onboarding of every individual user as they come into the application. And my own perspective is that second is probably closer to product over time. And Todd's company's been an innovator in this whole area. And I think the former is probably closer to CS, professional services and CS. But they have to work together, because when you implement somebody, you also have to onboard the users. So I think there are slightly different things of like implementing a company and onboarding a user.
Okay, so that's where you would split it, Nick. So, user by user coming on for the first time, on day 1, day 90, day 180, that may be led more by product than it is by CS, but the overall account health, that's going to be CS. Okay. Well, interesting. So. All right. Well, hey, let me move on. Let's move on to our second prediction. Nick, this one's yours. I'll move the slide once, and then you'll own it. So I'm going to pass over to you, Nick.
Great, awesome. Well, I've got one that I think it may be a crowd pleaser. So what I'm saying is that for a long time, customer success and sales have been working together, but not in equal footing. So I want to talk about money. So I brought a little prop here because I think money sends a signal of value, and I think value is changing. If you look at stats today, and I think if you're watching, you can probably feel this in your own company too, there is a disparity between how much a CSM makes and how much a salesperson makes. And by the way, sales is extremely hard. I value it a lot. But we've seen situations, I think everyone watching, where there's a deal, a big expansion, a new land because of an advocate. The salesperson did work, but honestly, that work was way easier because of the customer success person. But yet the relative pay is so different. You don't see CS people making $1 million a year, but some salespeople do, right? And so there's just this big disparity in pay. And I think what's happening, why I believe this prediction of balancing of comp is going to happen, is it's a supply and demand thing. Sales is an awesome profession that's been around for a long time. This chart looks at kind of sales in the tech professions in the tech world, right? And we know customer success is on a tear of growth. And so over time, as CS kind of grows and sales is growing, but at a slower rate, you're just going to have a balancing out where there's just more demand for CS. There's more demand for people, and more talented people are going to go into CS, and comp is going to go up. The second point, which I think everyone here knows, but we just can't forget, is that the economic value of customer success, as You Mon has articulated, as everyone here has articulated, is so valuable. I think everyone's seen a version of this chart before about the amount of growth that you get by focusing on customer success and how it makes your company so much better. A more subtle chart is just how much of a difference in value companies have based on their net retention, right? Net retention being a proxy metric for customer success. This chart looks at publicly traded companies and their multiple on revenue based on their net retention rate. And you can see that the companies that retain and grow their clients more are worth a lot more, not just in terms of more revenue, but in terms of multiple. So customer success drives a double benefit in the ROI. Number 4, in the old world, the customer lifecycle was all about acquisition, right? Marketing, sales, long process, and then post-sale was support, right? In this new world, as Todd talked about too, it's not just about selling, it's about onboarding, it's about adoption, it's about growth. So much more happens after that initial sale. The customer buys in smaller increments. And therefore, if more of the work is being done post-sale, I think more of the economic value and compensation should go there. And then number 5, we see unbelievable people coming into the customer success profession and people moving up. 2 examples here. I'm on the board of F5 Networks. The chief customer officer of F5 just became the CEO of Teradata. One of our clients, Pluralsight, the head of customer success, became the CEO of a startup. As you see talented people come into customer success and then move up into bigger roles, it means compensation is going to go up. So my claim is over time, I don't know if it'll get to 100% balance, but over time, we're going to get much closer between the compensation of a CSM and the compensation of a salesperson. And that's why it's all about the Benjamins.
So Nick, you are playing to win for sure with that prediction. So I love it. Actually, let me ask you this question. I'll start it off. And this is going to be very sobering, right? So let's talk about it from a financial point of view for a second, right? I know, if you take a look at some of those successful companies, right, they also have something else. They have very high margins, right?
Yeah.
Really strong margins. And so, and with CS, most people probably consider it a sales expense, but some people consider it a cost expense, right? Cost of goods sold expense. And so, with the margin sort of pressure to get more profitable and get better COGS, does that actually put a limit on CS comp at all? What's your sense on that?
You asked such a great question. That, just to make sure the audience follows, you can put customer success in your cost of goods sold, which affects your gross margin, or in sales and marketing. And it's the wrong answer to put it in cost of goods sold because you're thinking of it like a cost center. But all this investment, customer success, it what drives all your growth. It drives new logos because of advocacy, it drives your retention, drives your expansion. And so you should not treat it as a cost center. And I think when I talk to progressive CEOs and CFOs of these high, fast growth companies, they're not putting it in cost of goods sold. They're putting it in sales and marketing.
All right, so you're not going to get limited, at least, because of course you're trying to squash that cost of goods sold. So that effect is not going to hit CS comp.
I don't think so. It's funny. I was talking to a public company next week, and they said they're going to reduce their sales expense and put it into CS to try to make this transition to CS. So I believe that people realize this is a growth driver.
All right, Godard, Todd, any reactions to Nick's prediction?
Well, I'm just curious if in some cases you think the roles might converge. Especially in some of our large enterprise accounts. Our best sellers in a lot of ways behave like CSMs.
Yeah.
Where they're really so focused on making, especially like the initial project, and they might sell one product line, one business unit, but they then stay super close to it, actually make sure it's a success. And then that's what leads to the next business unit. That's what leads to the expansion. And I think especially in big enterprises, that's how you get the revenue growth anyway, right? You kind of do land and expand. So do you see, I'm curious if you guys think that could also be possible, right? Rather than having, let's say, a large enterprise account, you sort of a CSM and enterprise rep, the role kind of converges?
Yeah, I have 2 comments from my end. I'd love to hear from others. I think the roles definitely are blending together. I don't know if they're going to merge into one job, but they're kind of getting much more tightly aligned. You see a lot of companies implementing pods where CS and sales work together tightly. And the most extreme example of that, Godard, is in the consumption-based businesses. You look at Google Cloud, Microsoft Azure, CS and sales, like at the end of the day, they're so together because when you sign up for Azure or Google Cloud or Amazon, you don't spend anything until you start using it. And so consumption-based businesses kind of merge it together. Would the roles become the same? I don't think so, because I think there is a commercial hat and a kind of value technical adoption hat. I think there's a lot of value. I think in the smaller accounts, actually, interestingly enough, people do converge them together. But in your bigger customers, I still see them as kind of partners.
I guess my reaction when I first started thinking about this is, and this may be counterintuitive, but does CS want this? What I'm saying is that most sales humans, the reason they have higher overall OTE is that they put half of it on the line that's variable. And in our case, our CSM's base salaries are higher than our sales base salaries. So it would mean taking a lower base salary to get a higher OTE. And then what are you basing that variable on, and how much control do you have over that variable? And I think in some businesses where you take the renewal down, then you probably feel like you have control over it. But if someone else, like an account manager, is taking that, do you really want to put half your income at risk for some other human doing their job where they just may have bad follow-up? Like, I don't know if I'd be willing to sign up for that. So I guess the question comes that is this really, and this is completely separate, 100% agree that the value of customer success and the value of retention and its overall weight and the multiple. I think the question is this what CS in the audience can answer the question for? Is this what you want? Is this what you want to sign up for? And if it is, I think I'm open to exploring it. I think it's provocative.
I think it's a great question, Todd. And I think that it maybe puts a limit. Maybe we won't get all the way balanced. I think honestly, you're very progressive to pay your CSMs on a base level higher than sales. So Pendo's obviously a great company to work for. And like, I don't think that that's true for a lot of companies that I've seen where even the base is lower. So I agree with you. I don't know if we'll get all the way to 50-50 base variable for CSMs, but I believe in the world, the base will get closer to on kind of the same base for sales. And maybe the CSMs are on a 70-30 plan or an 80-20 plan where they have less at risk. That's a legit point.
Yeah, and when I talk to CS leaders, one of the things I hear, sort of to Todd's point is the folks going into CS often will come from, maybe they'll be from BDRs, and then if they're a BDR, it fits right in sort of that comp package. But if they come from support, right, or implementation specialists, it's a harder conversation to sort of put more at risk. So I think that's super interesting. All right, well, go ahead, Godard.
Related question, also what Todd said about the renewal, and because I think also if the CSM owns the renewal, right, arguably you could also comp them on that,
right?
Which is a little bit easier to give them more comp. And I'm just curious what you guys see where that's heading, right? Like, what does the AE own the renewal? Does the CSM own the renewal? And then who gets the commission on that if there is one?
Yeah, I can share what I've seen, and I'm sure You Mon has thoughts on this as well. I think that is the number one question everywhere, and I think the way to break it down is in your complex, big enterprise type relationships where there's a lot of purchases over time and where it's a long adoption cycle. It's really helpful to have the AE stay involved, and so the AE keeping the renewal, keeping the expansion, working with the CSM who's not as much on a dollar-based comp. What you see in the higher volume, lower end is more of kind of a handoff because the AE doesn't have much more to sell. And so therefore, often you'll have either a CSM on their own doing the renewal or a CSM and account manager working together. And actually in the private equity-backed companies where we do a lot of work, we find that they're really trying to push more revenue to the CS team so the AE team can focus more on landing. So I think it depends on the size of customer you're selling to.
Yeah, I think Nick's exactly right, but I think also overall, you'll like compared to 5 years ago, CS is more likely to own renewals today than 5 years ago.
CS is more likely
10 years from now, hard to say, but certainly.
It is true 10 years from now, hard to say, but certainly.
All right, let's go ahead and move to Godard. I'm sorry, go ahead.
Okay, go ahead. That's right.
All right, your prediction.
Okay, so my prediction is that customer success as measured by satisfaction will be the most predictive indicator used by both private and public investors to value businesses. And this builds a bit on the stat that Nick shared, that net retention is such a driver of valuation, but I think you can even predict net retention by satisfaction. And that's something we do on G2, we capture reviews. We actually use a net promoter question. So in real time, we can see every company's net promoter score and how that's trending. And I would argue that actually is a leading indicator of variables like net retention. And so ultimately, it's a leading indicator even of company valuation. And I think continuing on also to the next slide, I've seen this anecdotally with a lot of investors reaching out to G2. And maybe you can go back one, but I think I first saw this at G2 when Excel actually came to us in 2017, and we kind of largely been bootstrapping. We had some angel investors, but they came to us and they said, wow, we really love what you're doing. And we're like, well, why? And they said, well, we see all these entrepreneurs now in their pitches. They're using the G2 grids, the G2 reviews to validate themselves. And we as Excel are using it to evaluate companies, to due diligence, and figure out who's trending and where we want to invest. And so that's kind of the first indicator to me, wow, this is really something potentially for investors. And then I think continuing the next slide, we've also heard some great stories like with Zoom. And obviously today, everyone knows who Eric Yuan is. And I think the most amazing entrepreneur probably on the planet right now based on his success and impact on the world with everybody on Zoom. But I remember I first met Eric, back in 2014. We were both in the Emergence Capital portfolio. I was building my other company, Steelbrick. And I think what I love about Eric, he's always remained a humble entrepreneur. But then I also remember in 2017, he kind of did his first really big round where Sequoia invested. He became a unicorn. And the interesting story about that, I was talking to Sequoia partners about this. And at the time, they felt like they kind of had to overpay to win the deal because his financial metrics weren't that big yet. And to pay up over $1 billion valuation to get into it, they were uncomfortable about it. But then they said one of the things they looked at all the reviews and sat data on G2. And we have video conferencing, and they figured out, they did this on their own. Some of they scraped all our data, but they figured out, hey, that Zoom actually had a three standard deviation higher customer satisfaction than any of the competitors. And that's actually what gave them the confidence to really pay up. And obviously that's not become one of the greatest investments ever. I think last year Zoom went public, and I think now they have like an $80 or $90 billion market cap. And but I think it's just another amazing anecdote how investors were using this to justify a higher valuation. And obviously their momentum continues today. And then one other interesting thing, if you go to the next slide, that we looked at at the beginning of every year, based on all the G2 satisfaction data, all the G2 reviews, we also say, hey, who's the fastest growing, kind of the most trending products listed on G2. And this list was from the beginning of 2019. But then I look back on it, recently at the beginning of this year, and it's just amazing how predictive that was of future investment and future success. And you can see these companies, almost all of them have become unicorns. Companies like Monday.com subsequently raising $150 million. And many of them also just like DiscoverOrg, they merged with ZoomInfo. And now then they went public, $14 billion market cap. But almost all these companies, obviously, investors came in, raised tons of money, their valuation just skyrocketed. And so I think, and we're still working on doing this statistically significantly. And we have a bunch of data, but we also, interesting now, a bunch of investors have come to us. Obviously, our own investors like Excel and frankly, I can't disclose their names because they want to keep it confidential, but we have about a dozen now leading private investors, a couple of big tech hedge funds that are already consuming G2 stat data by API and using it both to identify trending companies for investments and to make investment decisions. So frankly, I think this is already happening. And I think every investor is always looking for an edge, right? Because if they wait for net retention data and the earnings results, that's very lagging. And we believe stat can be very predictive, and it's already starting to happen. And I do think that's going to put even more importance on customer success and stat. And for entrepreneurs out there, I do think investors are now really looking at this. So I think it's also critical to your fundraising.
All right. Well, let me stop you there, and we'll ask a couple of questions. So I fully agree with you. What if I'm a entrepreneur, a brand new entrepreneur? I'm going to now build a company. Are you saying, hey, go to market matters less if I have focus on building a great product that people love, have high satisfaction, and this is the end of really strong go to market? Are you going that far?
I would, and I've talked to some entrepreneurs. Like what I'm thinking of is Chris, who's building a sales enablement company called Groove. He's their founder and CEO, and he said their whole marketing strategy has been G2. And because frankly, he's had competitors like Outreach and Sales Off that raised a lot more money, and he went more the bootstrap route. And so he just said the only marketing investment he's made is just get his customers happy, right? Build great product, have great customer success, get them happy, and then get them to vouch and advocate for you. Mm-hmm. And frankly, now he has almost 1,000 reviews in sales enablement, and he's able to get into the lead flow of companies like Outreach and Sales Loft. And obviously have thousands of great reviews as well, and they're spending a lot more on marketing. But just by getting that customer voice out there, they get in front and they get into those markets. So I do think it's one of the most efficient ways now, to market. Obviously, you have to build a great product. Mm-hmm. You have to have customer success, but once you have that, I think using them as advocates on a platform like G2 is one of the most efficient ways to break through in a new market.
Nick, Todd, do you buy this? Like it's all about satisfaction?
I have a thought on it. First of all, what Godard and his team are doing is incredible. I mean, that's just an amazing story. So that was awesome. And G2 is so important for us at Gainsight. So that's not just the reviews, but the data and understanding and all that. So all that resonates. The one question I had are there certain categories of businesses where this thesis is more true than others? So in my own head, the businesses that have more kind of user-oriented products, like Sales Enablement's a great example. It's for the rep, right? Versus let's take a ServiceNow or a Salesforce core business where those are kind of system software. So it's like less about the individual users and more. And obviously there's a lot of enterprise value in ServiceNow, Workday, Salesforce. And so I'm curious, Godard, do you think that those big enterprise systems companies are affected by this too, or more just the user-oriented software?
Well, I think it certainly started more on the user-oriented side. We started with sales and marketing apps that tend to get bought by line of business.
Yeah.
I do think the impact is a bit slower in the kind of more IT enterprise infrastructure type products, but I do think it'll come there as well. And certainly in all the emerging categories, right? Like the category, obviously you and Nick are there, right? Like customer success or like outreach, sales and engagement, right? All these new categories, I think are very much driven by this. And I think it's going to take a bit longer in the legacy categories.
Great.
Yeah. First off, yes, completely agreed that, and congratulations on all you've done with G2, because I think I'm a kind of a data nerd, so I just love reading reviews and getting numbers and like that. It kind of plays to my, the inner data scientist here. So I think it's hugely important. I think it's a great indicator, an early indicator of success. I think the predictions word is only. Now, if you have an amazing product and you just refuse to raise capital and scale it and like grow your business, like I think by raw numbers will probably not grow as fast. So I think you need to, this is what, sparks the fire. You still need to like pour the gas on it to actually see it happen. So I think it by itself it's critically important, but I don't know by itself if it's like the only thing you can do. So I'm old enough to remember lots of old technologies that were like amazing technologies that I love that just somehow mismanaged or like, didn't really scale it and then disappeared and got crushed by someone else. So it always made me sad, but there's lots of old stories about that. So.
Yeah, but I agree with that. And I also said, I didn't say only, right, but I said the most predictive.
My bad.
Entrepreneur, if you want to win, I think it's a great way to kind of seed your business very efficiently. But at some point, you do need to add the capital and get the revenue growth.
One thing I'd add into that, building on what Todd said, and I think I'm not disagreeing with what you're saying, Godard, but just something I think about. Because there's so much fluidity in tools, when somebody has a great tool and people are using it, that's awesome. But actually, the next tool that's great, like people are very willing to switch too. So one thing I've found is there's a lot of software out there that people love, but then they gladly switch to other software. Like you look at the world of like project management and work management, it's unbelievable how much innovation there's happening there. Asana and Notion and Monday and Smartsheet and so on. But there's always new ones. So there is a little, maybe this just reinforces the importance of the job everyone has on this call, because you can never rest with the satisfaction people have. There's always another company coming for you.
Wow, that sounds like another prediction, Nick, about what happens with software. That's interesting. Well, hey, I know we run a little bit over because I actually this is an amazing conversation. I can talk with this group for many hours, but I want to wrap up our conversation right now, and we'll turn to the audience part of it.
Okay, here's one. Maybe Todd, you might have some thoughts. Corey says, "I'd be curious to know when we say have a great product, what do you think the key measurement factors are?"
There's a lot of measurement factors. I mean, early on, we've been working on this concept called a product engagement score. Feel free to Google product engagement score Pendo. You'll get more data about it. But broadly speaking, we kind of look at three vectors: breadth, depth, and frequency as three axes upon which to measure product success or product engagement. But yeah, I'd start with that for a short answer.
Todd, there was a question about,
should CS own the product-led onboarding? I know you want it to be somewhat automated, but who actually owns all of that thinking?
Well, I think I think CS needs to be involved. Certainly, I think in an ideal world, it's a cross-functional team, just like a product-led growth team would have a marketer, probably a product manager, a designer, and an engineer, or multiple engineers. I would see a product-led onboarding would have a customer success leader, manager, plus product design, engineering as well. So I think it's a cross-functional team. So that's kind of where it lives and where it reports. Like, I don't know if it matters so much, but certainly it'll be a team that has all those roles on it.
Okay, fair enough. And hey, Godard, can you hear me? Okay. Yeah, we can't hear you.
We can't hear you. Yeah.
There's one question that was going around, and I think Nick, maybe you can answer this one. With Godard's presentation, there was a lot of skepticism about NPS, as a valid or a legit, metric to really focus on. Any thoughts about NPS as a something to really focus on?
Yeah, totally. I mean, it's interesting because I think there is a lot of good debate about NPS, and there's a couple of core things to think about. One is NPS a good signal to engage with an individual account? I think it is a good signal because somebody gives you a bad score or a good score, you should do something about it, whether it's an in-app score or through email or whatever. Is it a good way to get feedback? Yes. Are you going to get good response rates through email? You'll get okay response rates. I see some people in the chat, 10%, 20%. Some people do get 50%, but you're not going to cover all the respondents. That's one issue. But then the second issue is when you aggregate it all up, one of the big challenges is in the consumer world, you can just take all people and take their scores and aggregate them all up. But in the B2B world, the score from an executive at your customer, the score from a user, and the score from an admin can't just be aggregated together into some meaningful thing because it's an apple, orange, and a pear. And so one of the things we recommend is if you're aggregating things up, aggregate NPS by persona. Don't aggregate it all up into some generic NPS because it's just kind of meaningless at that point.
And Godard, I see that your mic is working. We were talking about NPS as a legit parameter. There's some skepticism, like maybe we've reached peak NPS and we're sort of moving on from there. Nick just gave his thoughts. Do you have any thoughts about NPS sort of as the metric to focus on?
Yeah, no, I do think the metric itself can be very helpful. I agree with Nick. It does ideally get a lot of data by different personas. But I think also the important thing is don't just look at the number. I think almost all the NPS feedback tools, and I think getting them in app, but also asking for a comment. And I know we use NPS ourselves. But sometimes the goal is actually in the comments. And then obviously actioning on the comments, right? If you have a detractor, ideally you create a ticket, you follow up right away, you resolve their issue. Or if someone's a promoter, you hear what they love. And so I think it's not just about the score, but also the qualitative feedback and acting on it.
I believe that. Okay. And then Nick, for you, with your prediction, there was some worry about having CS being a little transactional when you changed the comp that way. So how do you mitigate, customer success from really just over focusing purely on upsell and renewal and becoming very transactional?
Yeah, and just to be clear, I think there's two different things. One is, should the overall comp of CS go up, which obviously I'm arguing yes. The other one is, what's the mix of base and variable, which Todd alluded to there. And I think that it's a good question, and I do understand the argument that you lose your kind of trusted advisor relationship and things like that if you get a variable comp component. I understand that. But I also think that in some businesses, getting clients to do more with your product and buy more is not against their interests. It's actually aligned to their interests. And actually, for a lot of businesses, if a client isn't growing spend with you, they're not actually over time going to get a lot of value. It's actually interesting. Like, I think it's a lot about the adoption curve. The early days of a business, I don't think you want CSMs driving expansion or being incented on it because you just want to focus on adoption, satisfaction, value. But over time, if a customer isn't growing their spend with the vendor, honestly, they're on their way to churning with that vendor. 100%. You're either growing with the vendor or you're going to churn with the vendor. There's no stable state. And so CSMs driving more expansion in the interest of the customer actually, to me, is not a bad idea as you get more mature.
Fair enough. I like that answer. All right, there's a self-serving one. Hey, some of us on this call are sort of quasi-competitors. Why are we doing this? Todd, why don't you answer that question?
Because you guilted me, You Mon. I mean, isn't that the true answer? So I think you told me that this was more important than the rest of the things on my schedule. No. In all fairness, look, I mean, this is just a great conversation between people that I respect. And I mean, yeah, there's aspects of all of our businesses where we probably compete, but that doesn't take away from, we also probably share a lot of joint customers across all these various companies. And so there's value. And it was it Microsoft that coined the term co-opetition many, many, many years ago. And I think I consider all of you, friends and people whom I respect in the industry. So that's the truth. That's how I feel, at least. So I can't speak for everyone else.
I appreciate it, Todd. And by Godard is Switzerland here. Actually, he's the battlefield on which we fight. Right.
I would say, I mean, this is kind of an adage. I think it's true, though. You do help each other grow the category. I remember even Nick, this was maybe a few years ago, you're like, oh, I wish I had a stronger competitor. And so maybe You Mon is helping with that. But I think most great categories are like the last company I built was a CPQ company. And frankly, until I had competitors like Aptus, I was building Spielberg. It wasn't a good category until there was lots of competition. And you do all help each other because we all fuel the ecosystem. And I guess the goal of this call, right? We also help our industry get better customer success, get better customer sat. And I do think ultimately it helps everyone on the call, but also helps all of us.
Yeah, and we have Gainsight. Oh, go ahead, sir. We talk about like our concept of our company purpose and culture as we talk about human first business. And I always talk about the idea that like customers are human beings and your investors are human beings, your employees are human beings. We need to treat everyone more like human beings. And I always use the example of competitors. Competitors are just a bunch of human beings. I mean, honestly, I would totally invest in a future company Todd worked on, or partner with him, or recommend somebody to him, or Godard I'd work with any day, and same with you, You Mon. So you guys are just great people.
Well, I'll make a last comment and let's end on a real positive note. Maybe we'll pull the country together, with this session. And that is, I do think it's a new space, and Nick and Todd invested so much in really helping create it, and that's just not easy. And great spaces are full of many great companies. So, and so that's why we're here together. So, hey, sorry for the technical difficulties in the transition. Todd, Godard, Nick, thank you for joining us today. We have thousands of people on, and it's going to be a great day. So for those of you in the audience, please vote in the poll on who you thought had the prediction you most agree with. And the winner is Nick, of course, with the prediction that is the most beneficial to the audience. Really cool, but you win. All right, thanks everyone, and we'll see you at the next session at Big Rig.
Thank you. Thanks, You Mon. Thanks.